Palisade Global Investments is pleased to present the Hard Asset Conference on Jekyll Island, with keynote addresses by Eric Sprott and Dr. Edward Griffin, author of The Creature from Jekyll Island. The event will be sponsored by Triumph Gold Corp, currently drilling its 100% owned Free Gold Mountain project in the Yukon, and by Mexican Gold Corp, just weeks away from publishing its maiden resource on its Las Minas gold project in Veracruz State, Mexico. Come join us at the Jekyll Island Club from October 19th till the 22nd. The event is limited to just 50 participants. Visit palisadeconference.com for more information. Welcome back to another episode of Palisade Radio. This is your host, Colin Cattell. Returning guest on the program today is Brad Cooke. He's one of my favorite guests. We've had him on a couple times now. He's the CEO of Endeavour Silver, which is a primary silver producer based in Mexico. And the reason I want to get him on today is if you're an investor in many of these primary silver stocks out there, what you will notice is as of a couple days ago, there had been dramatic sell-offs and a lot of these stocks were bouncing along a 52-week low. Now, as we record this on Thursday, August 10th, it appears some of those companies, including Endeavour Silver, are marching back up and getting some gains back after those losses. But just to give you an idea, Tahoe Resources, 52-week, 493 to 1701, it's at 516. First Majestics, 52-week is 592 to 1915, it's at 677. And Endeavour, 208 to 595, it's at 218. So Brad, what is the sentiment on the market right now? These silver stocks just got absolutely hammered.
Yeah, Colin, thanks for inviting me on. Basically, we went into the usual summer doldrums in the precious metal markets with the stocks slowly but steadily declining and consolidating and declining and consolidating. You can see that in almost every silver mining chart. None of us thought it would be any different than past years, but August here has been pretty dreadful in terms of the metal markets. And so any news, for instance, second quarter financial news, was an excuse to sell. We announced flat earnings, no, not positive, not negative, and the market took that as a big negative. So we got sold off big time in the last week. And so I think the sentiment was turning quite negative short term. And I was actually looking for more declines in August until yesterday and today. And what happened was, of course, the action regarding North Korea and the inaction with regard to U.S. legislation, I think combined to prop the precious metal markets up for sure. We've seen both gold and silver turn around and start marching higher to the point where they've broken the short-term trend. So no, I'm thinking we might be looking at a multi-week uptick here.
A lot of these rallies that are based on political threats, North Korea being this time, have kind of fizzled out over the last year. You can even think back to the night that Trump got elected where it looked like a whole new trend was being put in place with gold way up and the stock market down, and that reversed before the market even opened the next day. Do you think that this is sustained more than just a couple days out?
Well, I think the fundamentals supporting a secular move in gold and silver have nothing to do with Trump, Korea, or even the Fed. I think that has everything to do with global debt and deficit. So Korea happens to be today's trigger, and the next wave up in these metals will be a different trigger. So yeah, it's sustainable, but not because of North Korea.
Brad, let's talk about Endeavour Silver in particular. Looking back at the chart just on August 1st, you were at about $3. I know some news was put out a few days ago, but that also happened to coincide with a bunch of other silver companies selling off, and your stock hit a low of 208, so you lost about 30% in a matter of a couple days there. Tell us what's happening internally with Endeavour.
Well, we did announce our second quarter financials last week, and today actually we have some news out on some executive appointments. We've hired a new VP of engineering. We've formed a new technical services and mine development group. That's primarily to make sure that our growth projects get built on time, on budget. And so we're pushing ahead. We've actually got quite a a list of material news we think is coming over the next few months with brownfields acquisitions to extend mine lives, brownfields exploration around the 3 mines, new discoveries potentially on some of our exploration and development projects. So a busy time for us. And we think that the second half of the year, both operationally and from a growth point of view, will be significantly better than the first half.
Historically, silver is a very volatile metal. Compare it to gold, and the swings are much more violent. You can just look at what happened from 2011, where the price hit about $50 an ounce and quickly dropped in half. So a lot of the silver producers, Endeavour included, are kind of skating by at the current silver prices. There's profitability in sight, but what do sensitivity models look like all of a sudden when silver does begin to have a rally? What kind of leverage can silver investors get from these companies instead of buying silver, the metal itself?
Oh my goodness. Well, because we're currently a higher than average cost producer, that means that our leverage, cash flow leverage per $1 move in the price of silver is higher than most. And I don't have those numbers handy, but when we did them a couple of years ago, we were looking at leverage somewhere in the $7 to $8 million of EBITDA for every $1 move in the price of silver. So pretty material. If you go forward 3 years to our 50% growth forecast, call it 15 million ounces of silver equivalent production 2020, then you're almost doubling the EBITDA leverage. We'd be up in the $15 million of EBITDA for every $1 move in the price of silver. So pretty material.
Most people would agree that we're in a bull market for the metals, even though we've given back a lot of the gains over the last 12 months. But I'm just looking at the chart of Endeavour. In fact, we sat down in Vancouver and talked about this, that Endeavour had gone from a low of $1.10 back in January of 2016 up to about $6 just 6 or 7 months later. And since then, it's given back some of those gains. But what is the second leg of this bull market going to look like? I know you can't answer this directly, but this is essentially 100% above where you were starting off that first leg, and things should get quite exciting when we have the next move.
Oh, absolutely. And keep in mind that the completion of the first leg is what we're doing right now. We had an absolutely unforecastable bounce last year off of a $1 low to a high of $6 in the Endeavour shares. And gold was up 25% last year. Silver was up 50% last year on the bounce. That kind of prolific bounce is always followed by prolonged correction and consolidation of those gains and looking for a bottom before the next move. We are looking for the bottom and may have seen it already this month. So the next move up, it won't be as big as last year. I don't think that's reasonable, but I think now we'll start that stepwise upwards move that usually marks a multi-year secular up leg. And last year's bounce was just the first leg of that.
Right, and as you pointed out, last year's bounce was dramatic in terms of the price increase, and it was also rather short in terms of how long it lasted. The retracement for the past year has a lot of gold bugs questioning if that this is a real rally indeed, and it wouldn't be surprising to see something a lot more prolonged with a slower climb on the next leg up. I'm sure a company like Endeavour would invite that type of a movement rather than these volatile up and downs.
No question. And, investors, regardless of sector, always look at the recent past as a way to predict the near-term future, which just doesn't work that way. Markets don't work that way. So what happened last year may have been a good sign of a bottom for the precious metals and the miners, but the magnitude of that move should not be used as expectations for the next move. I mean, go back and look at history. I think that a multi-year, like 3 to 5 year secular move in the precious metals, which is really a downward move in the U.S. dollar, will be a more orderly stepwise, three legs up, 2 legs down, something like that. And I think you'll see that next, call it baby step here this year between now and Christmas.
Well, Brad, I find these type of quick sell-offs a great entry point, and the moves today in some of these stocks are hopefully just the beginning of what we're going to see for these silver companies, including Endeavour. I'm going to try to get this interview out today because this could be a whole nother picture in another couple trading days here, but hoping the best for all these silver companies, including Endeavour, and thanks for coming back on the show.
Colin, as usual, your timing is impeccable.
Think you understand the junior mining sector and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
How violent that term could be, it actually could be quite violent. It could be a rip your face off uranium rally.
And the world is always going to need raw materials. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, Troll, did you hear what's going on in Yemen?